Good morning, traders. It's 8:02 a.m. Chicago time, 9:02 Eastern on Tuesday, the 21st of March, 2017. Thanks for joining me again on another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning is slightly bullish, not by much though. The S&P 500 is up 4.75 points or 0.2%. The leader in the pack is the Euro Stocks 50, which represents 50 of the blue chip stocks across Europe, across the Eurozone. It's up 22 points at 0.65%. The price on gold is unchanged currently, and the weakness is in the U.S. dollar, the euro bond, the Treasury bond, the U.S. Treasury bond, and the 10-year note. So overall, the market is slightly bullish coming into today versus yesterday, relative to yesterday. As far as news flow, not too much going on. UK inflation suppresses the Bank of England's target. The consumer prices jumped 2.3%. That's pretty big in February. It flew by the Bank of England's 2% target for the first time in almost 3.5 years. The French elections presidential debate kicked off yesterday or this morning, maybe, I don't know, with no clear indication of who won that. And other than that, there really isn't all that much to talk about this morning. We just got, in the U.S., we just got the Q4 current account, which is negative 112.4 billion versus negative 129, so slightly better. As far as what we're expecting for today, the remainder of today, not much at all on the calendar. We do have speakers, though. Fed Speaker George at 12 o'clock Eastern, and Fed Speaker Mester comes in after the close at 6 p.m. Eastern this evening, and that is it. So it's a day where the market has to move under its own power. A lot came across, as I said, for the UK: CPI, RPI, PPI, PSMB. Just a lot of acronyms just flew out at us overnight. As far as what we expected yesterday versus what we got, the primary hypothesis yesterday, for those who are in attendance here, the primary hypothesis is for responsive up, for the market to start shifting up towards that MC point of control, which is also Friday's point of control. That price is 76 even. 23.76 even, and then the expectation is the market would fail to push through and rotate down. The target on the down rotation was expected to be 68. The extended target is around 62, and that's pretty much what happened yesterday. Again, the goal here, as always, is not to be right. It's really trading. Just forget about the idea that you're doing homework and you're practicing and trading for the sake of being right. Being right here does not matter. What you need to do is find that side, the bias, which is in alignment with the market, and find an entry that gives you a good low risk reward, or high reward risk. And enter it and let the market kind of determine the fate of the trade, okay? And then the secondary hypothesis was for initiative move away, for it to base, and then to start rotating back up around the 68 area, to start rotating back up, push to 67, and then potentially higher into the session. That did not quite happen. Here's what actually took place. We did have a small move on the open down, but I classify this as an open auction out of range. The market just had a quick move, but there was no corresponding action on the delta. There was that move down, happened on thin air, very little participation, and then the market finally rotates up to 75 here, 75.75, missing the target by the tick. Look at the pullback. The pullback comes back to the opening swing high, which is the high print on the open against the mid right here at 73, 73 even, 72.75. Rotates back up, takes out the prior high by a tick to 76, extends the range or breaks the IB high by a tick into the opening, into the point of control, which is also the MC point of control. Remember, the target upwards was 76. Pulls back down to the mid, lower high, and then starts consolidating, and boom, you get the drop, pullback, continuation, and then we get the corrective move back up, and now we're trading to 23.75. Very orderly auction yesterday. If I hope you can see that. I mean, this looks pretty much the same as what was expected here, except for the drop on the open. We get a push to there, to the 76, pull, push, failed high, and then an impulsive move down, and then later on it got corrective, which I cannot predict. That's later in the session. But overall, the market pretty much traded in an orderly way. And if you look at the overnight session, we have an impulse pull. Notice the mid of the impulse, this little black dashed line. You see that black dashed line right there? That little black dashed line is the mid of the impulse move up, of the rotation up, and that's basically exactly where we pulled back to at 73.69, and then we continued the move higher overnight to be trading 23.75.50. Currently, the overnight high is 76.75. The market is likely to continue to rotate higher this morning. So that's that. As we as we shift this this profile forward, look at how fat that profile starts to become underneath the point of control. It is filling in quite nicely and becoming more and more Gaussian in its nature. We did put in a high volume node down here, which will likely come into play at some point in the near future. 2370 is key. 2374 was key off of the FOMC. That level was the first pullback from on the FOMC before the continuation higher. You need to pull up that day and have a look at it. It's an important indication on that day. However, now that area is 2370. So as this profile gets more and more Gaussian, or gets more and more has a more and more normal distribution, it is continuing to coil up, and that is energy that is likely to wind up giving us the next move forward. So, oops, that didn't draw very well. So if we draw this like that, oh, can't do it on here. If you look at how the market's been trending, however, we've been getting lower highs, and overall the market's been in a downwards channel, as you see here. And the market this morning is starting to move towards the upper end of that channel. If we break that channel, just for those who are trading on patterns, if we break that channel and pull back to it, it gives us another base, just like we did, like we got last week. It gives us another base from which the market could find a bargain in buying, and will likely continue to rally. Last week's high was 2387.75, and that's the next key target up above 2376. It's 11 points up. Here's what happened overnight. So this we had some noise here. So we had the impulse down, continuation, push, pull, correction, and then impulse up, pull, continuation, and now we've been sitting sideways in this range here, just holding steady. If you look at yesterday's profile, you'll find that there's a cutoff point here at 2372. Again, 2372, 2370 our key areas of support below on a first test, and I'll be monitoring that. But this condition here, the way the market is set up here, it is likely to continue to move higher, and that forms my primary hypothesis. I want to step back for a moment and just show you this chart. This is my flex level chart. This is where I put my flex levels before they're uploaded to the server for anybody to download and use on their charts. Just to get, again, I want to review where we are, just to give you an overall perspective on what the market has done. The market keeps, again, like I talked about yesterday, keeps popping up and just moving down, popping up, moving down, popping up, moving down, and it's doing so in a very stair-step logical way. So if you look at these bottoms here, you'll see that we're in an upward channel week on week. On a day by day, we're moving downwards, and that's what's happening. And this is a market that has conflicting views on the weekly versus the daily, and so the time frames, the different time frames, the weekly time frame versus the daily time frame, participants are duking it out. They're seeing value in both directions, and so this creates a condition where the market is likely to just swing around and balance for a while it forms a big profile before it starts to move again, probably to the upside. If you look at the overall conditions here of what we've done, as a trader, you've got to believe that this is nothing more than a flag. So we had our push up, pull, and then we're just doing this right in here. So eventually we're likely to create some sort of a wedge or triangle, and the likely continuation is to the high side. I don't see any indication at all of this market having any gusto to the downside. It's not able to maintain or hold prices to the downside. Big areas of support way down here in the 2270, 2280 area, and there are some pretty good support areas all the way throughout. So it's a market that's showing a fair amount of strength. It is teetering a little bit, and this may be seen as an impulse pull, push, failed high, and continuation down. This low is key. This low being 2351. This low is key. If we start to move beyond it, it might change things, and the profile down into this area is very thin, is relatively thin, all the way down to 2290, and that would be the next target after 2351 or 2350 goes. It's likely to move through this area fairly quickly. So just keep an eye on the big picture. It's important to know what what the overall picture is. Let's take a look at our expectations for today. This morning, let's remove these flex levels, clean this up a little bit. This morning, the expectation is for the market to open in an open auction, have a small pullback. The key area to see support this morning is 72. I'm looking for it to push through the overnight high and then start to attack the areas above 2380, and then continuation to 2383 is what I'm expecting up here. That's the primary hypothesis for today. I'm expecting the market to just have a small pullback, find a base, and move higher in the direction of where it is now, based on what we did yesterday. A nice little excess low here, nice taper on the profile. I'm looking for it to start pushing higher. However, overnight inventory is long, so I'm looking for that to flush a little bit before we continue higher. Barring that, given that we are in 2376 and it is the MC point of control, the highest, the most traded price in the area, chances are we might get tangled here early on. Look for a push higher, and if it starts to move through the opening swing low, then I'm looking for 2370 with a bounce actually push higher, fail through the opening swing low, and then I'm looking for 23.72 to provide a small measure of support, and then the target becomes 23.70 below, and that's your secondary hypothesis for today. Okay, so those are the plans coming into the session. Again, make sure you do your own plan and make sure you're ready for whatever the market's got to throw at you. It is better to come in with ideas of what the market's likely to do given the context. This is the core of the exercise, is to force you to think about and look at the market, the big picture of the market, and figure out what the position of the market or what the stance of the market is. Just going through that exercise allows you the flexibility on execution to know that, hey, it could go either way, but any plan is better than no plan at all. I've been around traders long time, approaching 17 years now, and it just seems like those guys who come in and shoot from the gut, they see some consistency, but when things go badly, they give away an extraordinary amount for the sake of just operating from the gut. I don't want you to do that. I'm trying to save you from that by doing these trader bites. Good luck today, and I'll catch you tomorrow. Take care.